Welcome, traders, swingers, quants, market lovers, pizza lovers, peach lovers, anyone. Welcome to Inside Traders. This is a show where we dive into the inside trades that are happening every day in the markets and learn what we can learn and try to, just have fun with the happening every day. I had a tab open. And there we go. The stream is working. So we look at the order flow, which looks like this, and it's just like, what are people buying and selling, and what's the sentiment? Today it was bearish, leading into next week, which is pretty exciting because we have the Fed will be giving us guidance, and so that is bound to create volatility. And if you've listened to anything I've said in the past, one of my primary objectives, which I've never done, is to ride these guys' coattails. I want to set up my portfolio in a way where I can really quickly invert my returns from the market going up to the market going down, because I am completely agnostic on price. I have no opinion on what the price will be. And I think I have like long-term ideas of what I think it could be if why I'm buying the asset turns out to be accurate, then I think the price will be higher or whatever. But on any given day, I completely do not have any opinion on what the price could possibly be at the mid of the day or the open or the close or whatever. I really don't think that it's possible to predict it. And so, what I like to do is just go by the sentiment. So if people are being bears, you don't want to be a bull. And although there was plenty of bullish sentiment in the market today, what I'm wondering is if it is kind of residual sentiment from, if we're just at the top and this is the decline. And so what I have observed from reading the tape, as it's called, which is a time-honored tradition from traders like in the distant past, who would try to get an edge because they would know what the price of some, wheat or barley, I don't know, like what wool, something like what the price of stuff was on the other side of the ocean, because that would help inform them and inform their trading decisions. And so they would tap it into Morse code, or eventually we have the internet and all this fancy nicely colored charts and graphs and tape, and it's really valuable to be able to see what people are buying and selling. And ostensibly, these people know more than anyone because they're deploying the most capital. So we should follow and respect what they do, at least in terms of how we consider deploying money into the market, in terms of the price history and the technicals, and maybe it's a hedge. Maybe we're hedging to the upside or something. So there's a ton to think about, but one of them that I've found to be quite predictive is order flow. And so what's really cool is if you can start stacking options safely, because you have a way to manage them all. You cannot do this without a very sophisticated system. You could probably do one option, right? Or maybe 5, something. But I want to develop a system and share. And part of what you can also find on my channel is I do some live coding with AI, who wrote the intro for this show, which is kind of fun. We do some live coding to develop tools, because I think using modern technology for the first time in history, anyone can compete in the markets with the biggest players, because if you really have a good system or whatever, then stuff just amplifies and it doesn't take a crazy amount of capital to begin. And so, yeah, like that. Another thing I talk about maybe too much is margin being amplification and options being leverage, and the duplicative, multiplicative power of combining margin with options gives you an incredible leverage in the market. Yeah. But you can lever up to like 50x. Actually, it is possible if you really want to. I mean, because you can always like change the trades. And so like if you just start buying, maybe you're buying on a 100-to-1 option on a 3x leveraged fund, you know. But it doesn't really matter because there's no real reason to need leverage if you play the game that these guys are playing, because they are experiencing years of price action in just a single session. And so I've talked about why I think that is. I can't think of any other, it is why it is the dynamics of option pricing get really exaggerated, and like there's either nothing happening or like they're super volatile, and it's all the way up until they expire, maybe like 10 clicks out of the money, and then they just like collapse onto the money as it zeros. As delta approaches 1 or -1, boom, like right as it hits 1, the price goes to 0 and the option is expired. And so, or what happens is it finishes in the money and then you can sell it for like a great premium. But there's, I think, a timing to it where you want to sell like, I don't know. Maybe if you have an in the money option, you want to hold it like right until, but then you're only getting the intrinsic value. You'd want to exit some extrinsic value. So I'm sure that I'll learn more and I'll be able to talk about it hopefully deeper. But for now, just look at like how much money these guys are throwing into the market. Look at the top one, Apple. Let me see what you see. Yeah. So they are putting 2.5 million of premium into the market. And what time did that come in? Into close. I mean, it's hedging. So like if Apple goes down, they're going to have a great day. If Apple like skyrockets on some like upside surprise, I mean, that's another risk of the Fed. There's always a risk, even that they don't know, of an upside surprise and a downside surprise. And so in my mind, you have to play the day as the sentiment dictates, which will be of a trend. Right now it's been bullish, but it's been bullish for a while. So we should have a reversal soon. See if I can get that one out. So yeah, we should have a trend reversal at some point, right? And that'll be interesting to see if I'll be able to profit from a decline, because something I talk about on this show is like the advantage of selling calls, which already gives you all of this negative price action benefit. And so it actually is not that hard to invert your portfolio, especially if you just like have deep in the money calls that you have like a great return on. You can always just wait for like an opportune peak, like maybe you're testing a level that is, a key level or whatever. It's hard to find those, but still. And you sell the call. And then the price declines. You can buy that back, like, and net a small profit there. But you can also, I mean, if you're super bearish and things are just crashing, you can also use that to then buy a put, which like completely inverts the delta profile. And so like all of a sudden you have like a double stack of negative delta on top of what was just a moment ago, like a great sum of at risk, whatever. I mean, not really, because in this scenario, it's deep in the money, but still, like, it's crazy how quickly you can introduce that to react to things. And what I want to get kind of better at is combining all the signals that you could possibly combine to like try to make it really hard to make like rookie mistakes. And that would be like being a bear on bull day, Well, how do I know it's bull day? You just look at the sentiment and see this is fake. This is fake news. You have to learn to read the tape, maybe, is what I think I've learned to do. And I'm trying to share that so people can call me out if they don't think I do that. Well, I think you have to look at stocks, not ETFs, which is also bullish. But there was, like, if we just look at the stocks I'm into, like technology, yeah, pretty bearish. But still bullish. Like, the market is bullish. And that's why I'm like, I have no idea what's going to happen next week. I have no idea. But like, we had a pretty good long run. So it seems like the shorts got squeezed. The sellers need, the advantage of being a seller is by default you're winning or whatever. Like, people need a reason to buy. There has to be a purpose to buy. And so that can be many different things, but with selling, you can just sell on technical variance and try to like, do extra selling at these key levels. But then I think buyers do the same. I think buyers have the same, ability to do that or whatever, but I don't think that it happens at the same concentration as it happens with selling, because it's more driven by like the reality and not the manipulated world or whatever. It's driven by like news and events and earnings and the natural market cycles. So anyway, a couple things did stand out to me today, and one of them was Microsoft. Very bullish on Microsoft and Opendoor. It was just one guy, but still. Like 1.2 million of premium, I believe, coming into Opendoor. So yeah, this is how I like to, you can go look at my past videos. I don't want to do it again, but like I can go through and show you how all this tape aligns to the price. Tesla is an interesting one. I call a fake out. I think it's a fake out. I don't know. That could be a shaft to the bears right there. That's what that could be. See that one? Let's zoom in on it and make it bigger. Boom. Whoops. Yeah. In all of its glory. Okay, a little too big. Little too big. Something like that. So, what is the high on that? 274.98. That's really high. Okay, so there's obviously some selling pressure right at 275, obviously, right? I don't know what these were, but we don't need them right now. So we didn't even touch 275. We didn't even touch it. Now, what nobody knows and nobody can know until we've thrown enough premium at it is how thick that wall is. Like, how impenetrable is the barrier? And so how much buying pressure is there versus how much selling pressure? And who's going to win, the bears or the bulls? Green is the bull, red is the bear, as you saw here. I mean, there's some red in there. It's pretty cool what AI art can do these days. I think I actually have Discord. Can I? Oh, no, not on this one. So, yeah, anyway, like if we were to read the tape, we can just, let's go do it just to prove it one more time. Instacart IPO tomorrow. What? That'll be cool. I'm excited. By tomorrow, I mean next session. That'll be fun. So Tesla. No, let's do it on this one, Tesla. I think their website is down, right? Tesla. Nice. So yeah, that's what I'm saying. It's pretty freaking bullish still. Like, I don't know. Like Tesla, look at these calls into open. This was the time. But then it was not the time because there was this massive put. I wasn't playing it. See, like this would have been a fun one to try to trade. I was half sitting it out, half playing it, but I definitely wasn't super focused. I was trying to work on some tools and automation. But like still, it was very bullish all day. So, and it closed bullish, which is kind of everything. Like how the day, what happens in the day matters a lot and is technically important. But what really matters is the close. And because that sets the open for the next day. And everything kind of gets geared into that. So Tesla has been bullish into close. So here's what's crazy if you are buying these in the money or just out of the money expiring options. And let's say you get lucky and you buy a put on bear day or whatever at what? 276. Oh, great put. This guy's like a hero put. And it was just probably like a little plunk, 25K. But that paid off real well. Now, imagine if we were just at the beginning of like a 1 week retracement price retest, which is inevitable. It's inevitable. It is literally a matter of time. It will happen. It's just a matter of when is it going to happen. And so knowing that it is impossible for it not to happen, what do we do with that information? Like that's so interesting. Like the thing is, it doesn't really matter if you know something is going to happen if you don't know when it's going to happen, because there's almost no difference. But we can try to figure out when it's going to happen. So that's kind of the point of a call, is you're saying I'm calling it at this price by this time. And yeah. So yeah, we get all these puts, but the point is, like, suppose you were just like at the top of that trend and you were right, and for a week you grew these puts that were like deep in the money. You would be buying a put here for $1.86 that would be trading at $25 in a week. And so I don't think people can hold on to them that long, but maybe you could if instead of ever selling the put, you did one of two things. You rolled it into long-term equity that has like a lot of extrinsic value. So the price won't move as much, but it has a lower delta and everything, because it's move it to a contract that has more extrinsic value. But you kind of want to do that in the money so that it cuts down also on volatility. It's pretty expensive, but you can roll 10-1 or whatever. And so that's one way to kind of bank put equity in a safe way. But I barely ever do that because I just end up wanting to cash out. It's still something I should think about, because in theory, you could have some kind of gain on your puts because of the increase in volatility. Is bad for stocks, but it's actually good for options. So option holders, I believe, benefit from a rise in volatility because puts and calls get more valuable and more expensive. So like in theory, you should never sell a put or a call. You should roll it into something, I don't know, like you have to realize gains. So it's not really practical, but I still think there's something to that idea of like stashing the equity into a high extrinsic contract. But I don't do it. So I guess I don't like doing it it's kind of like expensive, but not really. If you already have gains on the put, then you're just doing whatever. It is expensive. Couple bucks a put or whatever. But still, if there's profit, there's profit. So, Yeah, lots of puts. I mean, this would have been so good to like do these calls, boom, 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 and then immediately switch into put. What did this guy get? 278. Wow, freaking strong putter right there. That is an aspirational put. That's like the absolute top. He must have had that timed. It's a shame that that's not easier to do, where you can't be like, at this spot price, deploy a market order for that put. Maybe they do have that. So you get this put, and then you get calls, boom, 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 into close. Or I guess it's mixed, but yeah, lots of calls. So it's mixed. And that is because we're introducing today the uncertainty of next week, which is the uncertainty of the Fed. And so what we haven't seen on Tesla in like days is this much puts. We haven't seen it. And so it might be a good time to look at what people are buying and selling, which I happen to have right here. Through magical methods that are entirely my own, I can tell you as a fact that the current, and it's kind of surprising that this would be the case, the current call on Tesla is 276.5, which is like almost right where we are. We're $2 away from it, as you can see here. We can make that green, so it's kind of nice to see then. And this one red. And then on the put, and then we'll just format this the same because we want it to look nice. And what should the spread be? Spread, we'll call it neutral. It's fine, just leave it. So, and then the current price is like 274.5 or whatever. So this is so interesting to me for a few reasons. How is it like exactly a spread of $10? I mean, we could do the same thing with NVIDIA. Should we do it? Let's just do it. And see if it matches. That'd be pretty interesting if it's also a bid-ask spread of $10 exactly, because that would mean something. And this is what people are doing. This is what they're doing. So they're calling just like $2, 20% above the current price. It looks like, I don't what's the volume weighted average? 277. That can't be right. 270. Well, let's see what this one is. So on NVIDIA, the average calls equals, I mean, this is just volume weighted. And so I don't know, it's not like crazy precise, but it's not that bad in my opinion, getting an average. So let's just go until we get to like not a ton of volume. Anything above 10,000 looks good. So then all these guys are giving us a 253, and the current is, wow, that's quite a bit above. Call, put, spread, distance, and then yeah, doom, do the same thing to put, ba, da, da. I could have copied it, but I'm doing it by hand, so bear with me as I get us the put and call spread for NVIDIA live, which as far as I know, there's no other way to do it other than what I'm doing right here. All right, we'll keep those in. Whatever. It's fine. Boom. 444. Okay, almost there. So close. Equals this minus this. It's also $10. Holy crap. So that means something. Huh. To me, that means you're a dummy if you don't do a $10 spread. Wow. Well, what's the current? This actually has to be. 439. So we're kind of closer to the low end. Let's get that fixed. 5. Wait, that can't be right. This has to be reversed. What? Oh, I guess it's the absolute value. Right. So, but how can it be of $20 if the spread is 10? That can't be. What is wrong with our math? This current must not be current. Let's look at what actually is 438. That's what it says. 439. Huh. So anyway, they're calling way above the money, and they're putting. Oh, I see. Oh, it's because they're putting in the money. So the spread is 10. This is accurate then. So these are accurate. Okay, well, that was kind of obvious, but I had to think through it, I guess. That's what is happening, though. So the puts are in the money. I was expecting, I don't know, them to be out of the money. And so, but still, the spread is $10. What does that mean? What does that mean? I don't know. But I think it's interesting, and I just found it today, so happy to share it with you guys. Back to the tape, so I've talked about in the past, my strategy involves a lot of selling of calls to generate an income and a dividend, which I ideally use to then combine every indicator I can possibly find into the strongest and earliest buy or sell signal, which I then have some physical hardware actually that helps me execute ostensibly with higher speed and accuracy, although I'm not even remotely close, but I'm better than you could ever do without that stuff. And so I don't know. I mean, half the problem with being an options trader is like, how do you take advantage of the volatility? Like eventually, if the trade is just up, you can harvest whenever you want, and it's like up or down 40% on top of a 300%. So like it's not like as big of a deal, the fluctuations at that point when they've like fully matured or whatever. And but most options expire out of the money and worthless. And so I bet they expire way less out of the money and worthless if you keep your spread at $10. And so that's why I like dissecting this data and like trying to understand what are people doing. Like, I don't know any better thing than to look at what they are actually doing. And how is that not the best guide that there possibly could be? Somebody tell me a better guide. I'd be really interested to know what is better than combining technical analysis, meaning the history of the price, which is like the same as just reflecting on the human history or whatever. Like there's information in there that we can learn from and is valuable. And so it's not like astrology. I don't know why I feel that need to be so sharp about that. But still, there's valuable information in the price history. And what else? The order flow. Yeah, this stuff right here. And because that price history, when connected to the order flow, is kind of a great signal. But like, it's really hard to know what levels matter. You can just draw lines and see that there's going to be different levels, and you can play that if you're fast enough, but you have to be like super dialed in because the price changes so dramatically. This is why I have not been able to do this yet, but I think in the ultimate world, if you could get like only trading contracts that had a ton of volume, just like above 10,000, that way there's always trade volume happening. And that way you always have a live feed of the exact volume weighted midpoint between the bid ask spread. And that is the market price. Well, really the market price is either the whatever one you want, like whatever side you take. But like you can get filled so freaking fast if you happen to enter the trade at exactly the right moment. And in 1 second, as I've shown in the past, like we could look at it again, but it is just like 1 minute of time and the price can just completely, anything could happen. It could double in 1 minute, it could double. And so that's the kind of volatility that we're dealing with, which is why I think all these guys are playing with these options. This is real shit. This is nothing about this. This is the realest information out there. It's literally what are people doing. So not a ton of premium. So it was probably also just a light day because, who's going to play ahead of the Fed or whatever. But it's still pretty bullish. So I could be wrong. Like maybe it gaps up on Monday and just cruises. And then maybe they're like, hey, interest rates are 0 again. And then the market's like, what? That's crazy. And it rallies. Anything could happen. There's always a risk. There's a risk to the upside. There's a risk to the downside. And I think the best way to profit from both is through a series of tools and like data ingesting and, a lot of math. You could build some kind of early signals that would be extremely valuable, which I don't think anyone could have built before because this data has only been available for like maybe 5-10 years. So like whoever is trying it now is the first person alive ever to try. That's impossible to say otherwise. Like it's a fact. And so if you're trying to do any of the stuff I'm saying, then you are in contemporary with someone, or like you are, we are all doing the same thing for the first time now. So anyway, I think it's worth noting that basically everything we do in our modern life is for the first time in history is also kind of interesting. So definitely that case with markets. And yeah, like tons of premium. No, okay, never mind. I was wrong. 2 million. Okay, so it's crazy bullish. That's so crazy. Oh my God. And when did this come in? 275. I mean, that's a bad buy. That was dumb. They shouldn't have bought that. Like anyway, it's not like any buy you see here is an expert buy, but 280 at, what was the spot? Oh, 272. I mean, buying it 272, whatever you buy then is going to be doing well, assuming it's higher than 272, which it is. 271. So like what you want to do is you want to catch the low of the day, but Tesla's FUD, and let me show you why. First of all, hard rejection off that. Can you see me? Okay. You can see the chart. Okay. So hard rejection off the 275 line. No, you can't see it. Yeah, I need something like that. And then, anyway, that's fine for now. So, but you need to be able to see this 275. So hard rejection, boom, cannot penetrate, doesn't even test it. Highest read is 274.98. Okay, so then we go back and rewind a little bit, and what do we see? We see lower lows throughout the day, and even this is a lower low, which is, that only has to, if that happens 3 times, look at this. Speaking of 3, wow. This is definitely, looks like something, but I don't know how to zoom properly. There. Okay, so what did we get? Yeah, look, we test 276.51, and then we test 276.55, so it is looking pretty bullish. And then that was it, 276.5. So we never even got a third test. I mean, you could argue this one is right here, this red one, 276.5, but that's like the beginning of the decline. I don't know if that counts, but you could see, yeah, no, it counts. It counts. This is why. Here's why. The buyers pushed this line once, basically and a half, twice, 3 times your FUD. Boom, 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 boom. And then it's just like, where are we going to find some serious high volume buyers? And they came in around 271. So the current channel, unless anything changes, which it can, is 270 to 275. And the spread that the market is betting on is about $5 wider than that, twice $10 spread. And so, yeah. And look at this rejection. Like, that's a hard freaking wall to penetrate. We'll see what happens Monday. I think I am going to be looking for puts and see if I can test for one of the first times this theory I have that you can use sold calls to really quickly invert the positioning of your portfolio. So like, imagine if it was an army and at once you could invert and everyone was facing in the opposite direction. It's like in, you guys ever played those real-time strategy games where like you have the ally checkbox and you uncheck it and then all your men start attacking your allies and you just like destroy them and take over the entire fucking map? That's called the inverse black swan. No, that's called shooting for the moon. And what is the card game Hearts, where you can try to like get everyone else to take points. Anyway, so yeah, like I think the reasonable thing is hedging ahead of the Fed, and we'll wait and see what happens then. And what would be interesting is if the bull trend was able to continue through Wednesday. That would make me like hyper bullish. Yeah, I would completely increase risk in that situation. Not too much though. Yeah, I have been talking a lot about how it's actually really great to give yourself to cap returns by taking a credit, because it just gives you options. And even if you lose on that credit, you just know it's like that one option. Like if you have a bundle or whatever, I don't know, you'd call it a stack, then just you have a position. So like do 10% of the position at a time. And then if you're wrong about the price, that's amazing, right? That's so good. Oh, it's like so much more valuable now. But like more than likely, what's going to happen is the price is going to go test like a lower low. And then you have all these sold calls or sold puts. And then you can buy them back, ideally right at the low for a win or whatever. And if you're really paying attention, you can see the tape coming in. This stuff is hard. I'm not saying it's easy. Like it takes max focus, concentration. Probably should be well slept and in an emotionally good place to even try, because the volatility that we're talking about is it could be 1,200% up and then zero in seconds. So it really is. It could be anything. But yeah, like Tesla's bullish. It's bullish. And so the most premium came in later in the afternoon after this put wall. I bet here's what they're hoping. I bet they want to do one big push on Monday open, and then the sellers are going to like be licking their chops, and we're going to see these guys come in and be like, give us ours or whatever. Like they got to make up for the squeeze we just had, because stocks have, like Tesla in particular, just has been on a tear since 212. It's 270. Like that is really fast. So I just like looking at that bear. That's cool. Okay, well, I think that's the show. Is there something else I wanted to talk about? Pretty interesting on the spread. That's real. $10 makes a ton of sense. That's probably really indicative. I'll have to do some digging and compare it to like maybe 100 of them or whatever, and then see how much that is set by price. Like maybe it's 5% of price or whatever. I don't know. Like maybe the spread is a function. Maybe it's like a dollar value, or maybe it's a percent value. Maybe it's an absolute or a relative. I don't know. But I'll dig in and return and report. Until next time, we'll see. I don't know, like what's going to happen. Yeah, I think it's going to pop on Monday morning at 278.5, and then there's going to be a wall of puts, and I'm going to be one of them. All right, see you guys.